All right, in today's video, we're going to be talking about Amazon FBA finance options for selling or buying an FBA business. Now, what we're going to try to do in this business is this series, we've been talking about selling an FBA business. And if you haven't watched all the videos in this playlist, I highly suggest you go back and watch those as well. But Ryan Condi of Quiet Light Brokerages, an M&A advisor, very experienced in buying and selling of FBA businesses, is going to walk us through the different options because it's going to determine, how long the actual process takes. What are the pros and cons of these different options available to people when they're looking to sell their business? So Ryan, can you explain to me the different options available, just like from a high level, like what types of options are there? Of course, there's a cash option. Somebody might just pay cash for the business, but what are the other things that you're typically seeing when people are selling an FBA business?
Yeah, this is great. And I think there are countless options to finance a business, put together a deal, different terms. There's a million different ways to think about it, right? The most obvious one that everybody loves as a seller is all cash up front, right? So there's usually some component of cash and there's usually some component of something else that's out there. And the best businesses out there, the fastest growing ones, the ones that have been very buttoned up that we've talked about, you're going to get a high cash percentage of the business, 90%, 100% of the cash up front, okay? That's obvious. That's just cash going right into your bank account. Let's talk about some of the other ones. You had mentioned earnout, okay? Earnout and seller financing. I'm actually going to do these together because people confuse these, and let me give the definition of both of them and how they should be thought about. An earnout is going to be performance based. So an earnout could be, hey, Eric, I'm going to pay you $1 million for your business, but 10% of it is going to be dependent upon your sales over the next 12 months. If your sales over the next 12 months are higher than they were last year, then great, you're going to get that 10%. But if they're not, you're going to get lower, 90%, 80%, or, cut off at 70% or whatever that might look like. So earnouts are going to be tied to performance or something that needs to happen. A seller financing is actually going to be a set amount. So Eric, I'm going to pay you $1 million for your business, but 10% of it, I'm going to pay you, so $100,000, I'm going to pay you each month for the next 10 months, right? $10,000 a month for the next 10 months or for the next 2 years or whatever that might be. So that's a critical piece. And usually you'll have some sort of cocktail mix of cash, earnout, seller financing. And as the deal gets bigger, you usually will have some sort of earnout and seller financing that's going to be involved in there. Usually if you're doing a sale that's, 100,000, 200, 300,000, it's going to be mostly cash, if not all cash up front. The other alternative is once you cross over, a couple $1 million in your exit, usually if you've got an incredible fast growing business and it's very desirable, you're going to get a lot more cash, if not all the cash up front, but it's usually tied to some cash up front, some earnout, some seller financing. And then that fourth piece is a holdback. And that's just like it sounds. Hey, Eric, I'm going to pay you $1 million, but 10% of that or $100,000, we're going to put into escrow. We're going to hold on to that for a little bit. I want to make sure you train me and you teach me how to launch new products. And, 12 months from now, you're going to be able to get that. And that's going to be typical for a holdback there. Okay.
So holdbacks, typically 12 months. Obviously it could vary a little bit depending on the deal
I've seen it 30 days, 90 days. That's all over the place. Usually you want that holdback to be put in escrow. And so it's not something that's going to be there for 5 years or something like that.
Okay. So we talked about the different ways that you can actually finance this if somebody's looking to buy your business, but how do you actually structure the Amazon FBA deal? What do you do in that instance?
Yeah, good question. So the structure of it, you're going to have a mix of those, right? And the best businesses will have more cash up front. The businesses that aren't very strong, or if there's no interest from it, you're going to have less cash up front. I always say you should expect anywhere from 70 to 90% of the cash up front, and the rest is going to be a seller note or an earnout. How people finance these businesses is a variety of things. It's cash, it's credit, it's loans, it's investors. One of the most common things that people have done recently over the years is SBA loans. This is something that didn't exist for online businesses 5-6 years ago. And I think it was 2018. Banks realized that SBA loans are still around, or that the internet's still around, and SBA loans could be used to acquire these online businesses. An SBA loan is a government-backed program that you work with your local bank or your local Wells Fargo, Chase, whoever you want to work with, to do that SBA loan. And the government backs up to 80 to 90% of that loan for that bank, so they're willing to make those acquisitions. A lot of times from an SBA standpoint, it does take longer for a seller, so it's going to take you 80, 90, 100 days to complete that transaction when under due diligence. It's a lot longer because you are working through the government and some of the programs that they have. Those are great. What it does is allows a buyer to come in with 10 or 20% of the cash, but the seller can actually walk away with almost all the cash up front. So those are a couple different ways that you can structure it. And you'll find that over time, this starts to change a little bit, right? So, before 2020, we didn't have the aggregators who were coming in with tons of capital and being infused. And then now we're sort of post-aggregator at the end of 2022, so you don't have as much cash coming in, but there are still a lot of individuals out there, e-commerce businesses that are rolling up. There's investors that are backing operators from that perspective too.
Okay. What I'd like to talk about in the next video is, should you sell your inventory before selling your FBA business? So we're going to talk about that in the next video. And again, guys, if you haven't already gotten them, in the description, we have a link to this free book, the Exitpreneur Playbook, and a free valuation from Quiet Light Brokerages with Brian Conde. All right, guys, we're going to catch you in the next video.